A very good morning from Khandwala Securities Limited and welcome to Friday's trading action at Dalal Street dated July 1st, 2022. This Friday morning, SGX Nifty is seen rising higher for fresh air before another dive. That's how the benchmark Nifty is likely to behave on the first day of the second half of the year 2022. The two positive catalysts. First, overnight oil prices declined nearly 4% to $105 a barrel and down nearly 5% for the June month, the first monthly decline since November. This is a good news for our stock markets as oil prices are close to the RBI's assumption of $105 a barrel for its full year inflation projections. Second, the 10-year US Treasury yields was down to 2.98% as US core personal consumption expenditures inflation reading was weaker than expected. The US core personal consumption expenditure figure came at 4.7% year on year. This is the Federal Reserve's preferred gauge of inflation and it is significantly above the 2% target. Our call of the day suggests, despite the risk-averse market environment, not too deep waters likely for benchmark Nifty. Technically, expect waterfall of selling only below Nifty 15,621 mark. Nifty can fall only on backdrop of the familiar fears of more interest rate hikes and the risk of recession that can haunt investors. Now before we get into details, here's the preferred trade on Nifty and Bank Nifty. Nifty closing price 15,780, buy between 15,650 to 15,700 zone, strict stop at 15,321, targets 15,957 and then at 16,181, aggressive targets at 16,400 to 16,501 zone. Bank Nifty closing price 33,425, buy between 33,000 to 33,100, strict stop at 32,511, targets 33,750 and then at 34,250, aggressive targets at 35,793 mark. Outlook for Friday, all eyes will be on the June auto sales data to trickle in on Friday, 1st July 2022. Alongside market fears, the Indian rupee is at its all-time low of 78.97 against the US dollar on backdrop of strong American currency and persistent foreign fund outflows. In the June month so far, FIs have net sold rupees 58,112 crores. India VIX, which measures the expected volatility in the market, has inched lower to 21.84 levels. The Nifty options data for July series suggests Nifty is likely to be in a trading range of 15,400 to 16,000 zone. Maximum call open interest is at 16,000 followed by 15,800 strike price. So 16,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 15,400 levels followed by 15,000 levels. Call writing was seen at 15,800 and then at 15,900 strike price, while there was meaningful put writing at 15,400 and then at 15,600 strike price. Our chart of the day is bearish on stocks like AU Small Finance Bank, Dixon Technologies and Ipca Labs with an inter-week or inter-month perspective on any excessive early strength. That's all we have for now. For any queries, do contact us at 022-4076-7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.